Hello, this is Mike Swanson of Wall Street Window. I'm here speaking of David Skrika. I'm actually at his place in the Bahamas, so we're doing this just a few feet from each other. But the stock market closed, and you can see the CNBC channel behind me. Almost everything fell, and we were watching Facebook, which really had a dramatic drop today. And really, we were watching CNBC, and they're blaming the 400-point loss in the Dow today on the decline in Facebook, essentially saying if it wasn't for that, perhaps things could have gone up instead of down. What are your thoughts on today's market action, Dave?
Well, first of all, to go into Facebook, I got a chart here. And if we go look at this is ugly, man. It's going to get ugly. We go look at this, and Facebook has had this relentless climb, really only a few minor sell-offs like late 2016 here. But go look at this topping pattern we are now seeing, right? And this is kind of different than the 2016 decline, because what happened then is you got this gap down kind of off the top, and then you had this base at around 115, and then it moved out higher again. Well, now we're kind of seeing this topping formation between about 170 and, we had this top here at roughly 195. So I think when we break this 170, and definitely if you go through 165, that really would confirm that. And we're only a couple dollars away from these levels. I think that it will start to drop. And like, if you go look at this Facebook chart, I'm going to show you something kind of interesting. Like, again, note that after this gap up in 2013, you got this big move, and then you got this like slow, we call it the stairway to heaven climb. And the problem I find with stocks which do that for years and years, and have these huge gains, that usually ends even worse almost than a parabolic type decline, because there's just no volatility. And then what happens is the volatility all kind of breaks loose. Like, it reminds me, I was shorting a few years ago this Chinese company called Vips. And Vips was kind of doing the same thing. You'll see it better in the log scale. In like 2013 to 2014, it was just kind of going up with no volatility, like no real pullbacks. And then, okay, on the log scale, this doesn't look as bad. We go back to the linear scale. Vips went from like a couple dollars, to $30 a share, and it went down to $8 a share, right? So that's the kind of danger you could get into with a situation like that. And Facebook has a high valuation. You can question even the methods of how they make money. So and that's a real leader. And that's one of these stocks that people like just buy and hold and don't even think about. Because of that no volatility increase, they just think it's going to keep going up, whatever, 50% a year.
Yeah, and I know over the past week there's been a story about this Cambridge Analytica thing and whatever, but in reality there are warning signs that Facebook may be running into some fundamental problems with its business, or at least the rate of earnings growth is going to slow down. For example, they made changes with their Facebook news feed, and as a result, they say that people have done studies that show that there is now the average person in the United States is spending 20% less time on Facebook. Well, that's going to impact their earnings, at least slow down the earnings growth. And the problem with a stock that has that's an earnings growth story is it goes straight up for years, as you pointed out. Everyone buys it. Everyone gets in with expectation of more and more growth. And when those type of stocks suddenly announce that, hey, that growth story that you bought into of unlimited growth is not going to happen, or the rate of growth that you expected is even going to slow down, then you have stocks that can dramatically decline, and that endless uptrend gets ruined. For example, Walmart just a couple weeks ago announced that its online sales division was only experiencing 25% earnings growth instead of 50%, and Walmart got beaten down and smashed on that announcement. And it seems kind of silly. It's only a small part of their overall business operations. However, that stock had been going straight up. It had a buyback announcement twice last year that caused the stock to gap up and go crazy. And then these people, sell it. And it's what causes this vulnerable situation is that these stocks simply already have extremely high valuations. What's disconcerting about Facebook is it's been a leadership stock for years, and along with several other bad tech stocks, Amazon, Google, Netflix, Nvidia, Activision, about a dozen of these stocks. And people, I think, have come to believe that these are relentless stocks that always go up. They never pull back. And there's really no risk except the risk of missing out. And Tesla, I'd throw in that also. And if one of these stocks cracks, that perception, will change. And I think that could be, damaging to the overall markets, because this is what people are chasing. People aren't paying attention to what's happening with retail stocks, home builder stocks, other sectors, just mainly focused on the averages themselves and these couple fad stocks that they love to chase. But if the chasing doesn't result in big gains, people just kind of forget about it, go on to something else. And essentially that's what we've seen with Bitcoin and cryptocurrencies, where the masses who jumped in December, don't really care anymore. There's a small cult in them still, of course, but they're no longer really talked about at dinner parties, at Christmas parties, or any other kind of parties, because there's no party going on. And I think that could be what is starting to happen with Facebook. This could be a sign that the party for FANG, or the fad tech stocks, is coming to an end.
Well, you talk about Tesla. I really think that if you were going to short one of these stocks, that is probably the one to short, because I'm pretty sure they will go bankrupt. I really believe, like, if you go look, the financials are horrible. All they've been able to do is sell a bunch of bonds to finance this company. And if you go look at this new car that they did, they can't meet the orders for it. They can't meet the production goals. There's all kinds of new electric cars coming onto the market, which is going to act as competition. This stock has a higher valuation than Ford, one of the largest automakers in the world. So I really think, and then you look at the technicals here, this stock breaks 300. It looks like a big topping pattern here, and we could really, really start to break down. And then, Tesla took over Solar City, and Solar City was essentially going to go, like, I shorted that stock in my service at $50. And it went to $18, and Solar City was going to go bankrupt, and they just essentially took it over to keep it from going bankrupt. So Musk was basically using his one company to prevent his other company from essentially going under, right? So, and again, this has just like disaster written all over it right now. It's been ever to prop up, and like, look at it. This guy comes up with these announcements about like hydro, like fast speed trains and going to Mars. And whenever he does this, it like turns the stock around after they have some bad news in the car orders or whatever. But I really think he's going to end up like DeLorean. For those who don't know the story, is DeLorean, that's the car in the Back to the Future movie. And he used to work for General Motors and Chrysler, I think, one of those two. But anyhow, he tried to have his own car company, and he made those DeLorean cars, actually I'll put it up here now. And it's actually, there's a lot of similarities. Now, I think the other thing that's not similar is, most of these Teslas are good cars. It just doesn't make any money producing them. DeLorean actually had a really bad reputation of being a crappy car, right? But anyhow, you know all this, you can recognize this car from the Back to the Future movie, right? So, anyhow, he got a government loan over in the UK. And it was at the time when Northern Ireland was really depressed, and you had a lot of fighting there, and so it kind of brought some economic growth to the region. So he got money from the British government to kind of build this plant there, and they started building it. And then what happened is in 1982, there was two things. There was a huge credit crunch, and there was a horrible winter, and no one went out and bought cars because no one could basically leave their house. One of the worst winters on record. So then DeLorean went into the tank. He even ended up trying to do a drug deal to raise money to keep the company alive. And then they ended up dropping the charges, because what they said was the FBI entrapped him. But anyhow, so I'm not saying, maybe I don't know, hopefully Elon Musk doesn't resort to selling drugs. But it really kind of reminds me of the same thing. It's like a cool sports car. it's like this guy DeLorean was like dating like a very famous, good-looking, or I think he married this model, all this sort of thing, and he was like this kind of suave guy. He was an engineer, but he was also kind of like this cool kind of icon. And I think there's a lot of similarities. And Musk has gotten government money. He's never made any money. So I just think that's how it's going to go. And he is kind of, to me, like a BS kind of like fast talker, and he's a good salesman and talker, but he's not making any money. The balance sheet is a disaster. It's just, again, another reflection. Like we talked about cryptocurrencies being a reflection of cheap money. This is a reflection of cheap money as well. That a stock like this that makes no money, has horrible balance sheet, horrible financials, is able to go from $25 to almost $400 basically on hot air.
Yeah. Since you've been talking about Tesla, I'm just going to disclose that I'm actually short that stock. I shorted it the other week. I told my power investor group, they know I'm in that position. I'm not short Facebook. I wish I was, frankly, because I did also short it 2 weeks ago, and then I got scared and got out of it. And I'd like to short it today, but I would be impacted by that wash rule thing. So I'm kind of missing out on that chance, but I'm short Tesla. And one thing I'm just going to show people really quickly, you mentioned the balance sheet of the company, and this might be hard for people to actually see it, but I'll just tell you real quickly that in 2014, they had $4.9 billion in debt liabilities, and today they've got $24 billion in debt liabilities, and the liabilities are growing faster than their sales and income, and they don't turn a profit, as you mentioned, and it's just an unsustainable situation, and I don't really know how they're going to get out of it. And but one of the things about that stock is that it has also been a fad favorite. 2 years ago in 2015, in 2016, it was almost talked about every single day on CNBC and the Fast Money people. I remember the guy with the ponytail. One year, I think it was 2015, the company came out and said that they were engaging in strange accounting practices to goose their earnings, and they were having to admit that fact. And he said, don't worry about that and buy anyway. And I thought that was an outrageous, almost criminal thing to be saying. And 2 weeks ago, the chief accounting officer for Tesla quit. He resigned, and the stock went down the next day. And then the following weekend, as you mentioned, Elon Musk said he wants to go to Mars. And people grasped onto that, and the stock went up. And that seems to be like, to me, when I see companies that are blowing their balance sheet up, that have had a history of doing some sort of accounting gimmicks, and the CEO making strange statements that sound like pure hype, that's a questionable situation. And that's why I'm glad to short that stock. And it hasn't broken down yet. Facebook is probably testing support on the 200-day moving average. It could break that. I think it will at some point. I don't know if it's going to do it tomorrow, but Tesla is also in the same sort of situation where it could break down and have a collapse before, in the coming weeks or months. So I think it's an interesting one to short, but I kind of feel like the market averages are becoming tougher to trade. We had the NASDAQ go to a new high and then reversed. And when you see the Dow fall, over a week, as it did the other month, it becomes very difficult to short on the bottom. Then you ride for a couple of days. Now we seem to be going back down, but I don't know if that's going to lead to a big crash, or we're going to probably not. We're probably going to bounce or something off the recent lows. So that's tough to play and short these averages or go long the averages. So that's why I'm trying to just find specific individual stocks to bet against with a portion of my portfolio. And I'm long much more, in fact, than I'm short, but I'm not long, these NASDAQ stocks or trying to day trade. I'm long stuff I actually do believe in for the next couple of years, regardless of what goes on with the stock market. But how are you playing this market situation, because it is becoming more volatile. You know, last year the Dow only went up or down more than 1% of like 3 days, and now it's probably done in a dozen days. The VIX today is above 20. Last year it stayed below 11 for the longest amount of time in one single year. So we're in a totally different market environment than we were last year. So that's one takeaway people have to have. You know, that you just can't buy Facebook, Nvidia, or these other stocks thinking that this is 2017. They go up without ever pulling back. That's not going to happen. So what are you doing? What do you think people should be doing in this different type of environment?
Well, before I get into what I'm doing, I just want to show you some stuff about Tesla.
Okay.
Right? And so look at, man, this is the long-term debt. It's gone from $2 billion in 2015 to 9.4 billion last year, right? Now the revenues have gone up and the cash has gone up. That's only because the cash, like if you borrow money, right? If I borrow $1 billion from you, well, boom, I have the cash. The cash is going on cash flow. It's going up when you're selling bonds, right? And then you look at their income statement, right? Okay, it goes from $4 billion to $11 billion in revenue. But part of that is because they absorbed Solar City and they got the revenues from Solar City. But they also got bad things in Solar City, like debt from Solar City, etc. Right?
Go look at the cost of revenue, tripled
too, and you can see that their loss has gone from their operating loss has gone from 716 million to 1.6 billion. This company is a piece of shit. I'm sorry, I don't care if you're like Elon Musk. This is a piece of crap. This thing is a blanket company posing as a car or technology company, and it's at $300 a share because we're in this cheap money bubble, and they're able to, and he's able to get away with whatever because people think he's like the original Tesla, like Nikola Tesla. Right? And he's not. He's just selling you a pack of lies. I'm sorry, but he's not going to Mars. He's going to bankruptcy. So I can tell you that we all know this. And all of these busts, in 2000s was in tech, and you had companies like Enron, WorldCom, going to zero, and Nortel. I'm from Canada. Nortel, big communications company in Canada, went to zero. And of course, in 2007, there's home builders, subprime companies, big banks like Lehman Brothers and Bear Stearns that went to zero. So every buzz has different companies which are part of, the companies that go to zero. And I believe due to the financial problems this company has, they will go to zero. But you look at, they have almost as much debt as they have revenue. That usually doesn't work out very well, right? So, just to joke around, this is that new Model X. This is like the cheaper car that just came out with. That's supposed to be like more available to the masses because the previous Teslas cost like $70,000, $80,000, $100,000. This one costs $30,000, and it looks like a damn DeLorean too, which is kind of funny too, right? Like, it's got the wing roof and stuff, or wing the doors and stuff. So anyhow, so you can just see, and this is like the whole idea behind what John Maynard Keynes said, that the market can remain irrational longer than you can remain solvent. Like trying to short this thing for 3 or 4 years and not work out. I'm not saying that, like I said, I think this is the best of those shorts, but I'm not saying you should go out and short it, but the financials back up, this thing should totally tank when there's a kind of decline in the market or economy. So what I'm doing is I have a couple small book positions in companies. I'm kind of short the market via some ETFs. I'm really short like a lot of the corporate bond market via that in some of my family's accounts. So that's kind of what I'm doing. And then I'm fine. We've talked about it late. You know what? You're still here for another a couple days. So maybe our next video we'll talk about the deals I'm doing, right? We talked about the coins yesterday. Now we're talking about bubble stocks today. So maybe we'll talk through an episode of being long, kind of what kind of things we're doing long. But I buy private placements, and that's how I'm going along because these are pre-IPO companies, and they have the ability to come out at 3, 4, 5, 10x of where you buy them once they trade publicly. So that's kind of the way I'm going long, and then shorting via these ETFs or put options, etc. right? And there's actually, by the way, another car company. I can't give it away here because it's for my paying subscribers that I'm short as well. That is almost as ridiculous as Tesla in terms of its financials and how overvalued it is. And I've put in that company, etc. So that's essentially what I'm doing. And then obviously, then I have some positions long gold, etc. And we saw in gold today that when things get ugly in the market, this is a chart here. You can see gold started the day down $5 or $6 and ended the day up $3. So it is still a good hedge as well. And I think at some point, if you go look at gold, it's just crazy the lack of volatility we have here for the gold market in the last few months. We're talking, sorry, it's just taking a while for this to load up, but it'll load up. We're talking, if I don't get it there, I'm going to show you this. I should hit the GLD here. Yeah. This is, first of all, this is a 5-year chart. You can see that is you can see gold has not moved anywhere in 5 years. And in 1 year, you can see it here, but that looks big because it's just a small chart. But you're going between about 120 and 125, like a 4% trading range on the GLD, And yeah, here you can see it here. And if you especially got a longer term chart of gold, I'm going to go back 19 years so you can really see it. Yeah, this is like almost like no volatility right here, in terms of the way it's trading, et cetera, et cetera. And you can kind of see now this line in the sand, this 1350 to 1400 area, it has kind of become the resistance. And if that breaks, gold should have a huge move. And actually what's interesting, if we go back even further here, I'll go back 20 years. Here we go. You can see that we kind of had that same trading, like with no volatility, kind of basing on bottoming in the late 90s and early 2000s, and gold broke out. So, yeah, I'm going to be long some gold, short some select stocks in the market. I'm doing some of these deals, and some of them are like gold exploration companies, and then some of them are, like seniors, et cetera, and then. And some of the companies are in other sectors as well. Like if you want to know too, on the long side, this is the largest marijuana stock. Canada is legalizing marijuana. That doesn't really show. I got to get this shorter term chart. This summer, and if you look at these like this was up 3.5% today. These are acting way better than cryptocurrencies or what. So if you didn't want to be kind of in a growth sector that has momentum, I would much prefer this. And this stock looks like here, like this is wheat. This is the largest wheat stock in Canada, and you can see this thing here. It looks like the potential to kind of base here and maybe move back to these highs. I think what's going to happen in Canada is this stuff's going to be legalized this summer. You might get this kind of thing where you rally into the news and then sell the news. So I think you might actually want to be long some of these things. And you go look at this chart here. You could probably buy this company and put a stop loss in. I don't have any positions, by the way, because Mike and I have a position in another company that's going to come trading the next month or two. And, that's kind of the way we're playing the sector. But you could buy this with a stop loss here, $25 or something. So okay. So long story short, if I'm in a momentum sector, I'm going to be in marijuana right now because those stocks look the best. And to me, those are real companies. Like cryptos, whatever. I don't understand it. I got one crypto investment, but these coins, whatever, they're coins. They're not. I know stocks, right? So, along the marijuana, cannabis sector, get some gold stocks and have some short positions.
Yeah, and I think that's to me the most important thing I do is. And you do is I think we have a diversified approach. We're not betting on one single trend. And frankly, most people in the United States do that. They have half their money in bonds and half their money in stocks and believe that's diversification. But by being positioned like that, they're actually dependent upon government action to maintain both of those trends and no, mistakes. So this is an unusual year because bonds have been down this year and the stock market is wobbly. So all the other stock market bear markets, we've seen bonds go up and the stocks go down. And now it seems like something different, or we could be heading for something different. And people, I don't think, have any clue, unfortunately, about that or what to do. Or so, just one last question: what are your thoughts on what I just said? And what are you looking at? You're looking at the U.S. dollar right there. So what's going on with that chart?
I just want to show the U.S. dollar. The reason I did that is, of course, this is good for gold too. Look how weak that's up, which is actually like an ETF, but this is it here. And it's like, look how weak the U.S. dollar is acting, right? This chart is as of Friday, but it was down again today. That's why I like using up, because it's as of today, it was down, you can see. So if this continues to weak, at some point gold is going to really react to that and begin to rally. So, and what's happening with the dollar is, there were people trying to say that the yuan was going to collapse or the yen was going to collapse. But, people don't realize, the U.S. is going to have a $1.2 trillion deficit this upcoming fiscal year. You've got all this like rhetoric coming out of trade wars. And I just think that these things are all very negative for the dollar. So I just think that actually, and here's another interesting thing. Everyone thinks that because what happened in 2008 when the dollar rallied and the market tanked, that's going to happen. But I don't think that might happen this time. And part of the reason is, if you go look what happened in the financial world, Europe has all these 0% interest rates, right? So what happened in 2008? People were borrowing in dollars and speculating in everything across the world. And when everything tanked, they basically had to sell all their investments and buy back their dollars and then pay back those loans in dollars. Well, my argument is I think a lot of these loans now have been made in euros, because you can borrow cheaper in euros than you can in dollars, right? Like, you go look at the German 10-year bond, it's like roughly 0.5%. You go look at, a lot of these yields in Europe, they've got negative interest rates. So you can borrow in Europe for nothing. And I think that the euro has become that speculative tool. So if people have to sell in kind of some capitulation, they're probably going to have to go buy euros and pay back those loans in euros. So that's something that no one's talking about. But the reason I think a lot of these things are really impossible to understand, with all due respect, I know there were a couple of really smart guys. They were calling for this collapse in the yuan, and this is a yuan fund here. And who knows, the yuan may still collapse because China's got their own trade deficit too. But you can see the yuan is seeing this huge move higher and breakout. And I think that people are underestimating the debt bubble that's going on in the U.S. Corporate debt to used to be buybacks, the government debt. So these things are all going to put pressure on the dollar. And by the way, to me, again, that is just another reason to want to own gold. And let me show you one more chart, because we're showing the dollar. One reason I want to show you this, go look what happened. I'm going to get, again, like a 20-year chart in the early 2000s. And just like now, as the stock market bubble blew off, the dollar kind of topped here. You can see, between 2000 and 2002, and then fell apart, when they're, cutting rates basically to get out of the recession. So I would think that we saw a similar top here from 2015, 2017, and we could roll over in the coming years, which of course would be very good for gold and commodities.
I know we need to wrap this up. I want to show you something really fast that someone just emailed me this. It's kind of crazy. So this is a weird chart. It says cumulative GDP growth less federal debt issuance. So if you take the growth of the GDP, basically what it's saying is in the United States, debts are exploding faster than GDP growth. And if you take GDP growth minus the federal debt issuance, we're running at a massive deficit. It all began to crash in 2008. In other words, the U.S. as a whole is not much different than Tesla. We just use, bond debt to grow the economy, to grow everything. In fact, U.S. GDP, 50% of it is corporate junk bond debt. So it's just a funny chart right there. I thought I wanted to show you that. Someone just sent it to me minutes ago.
Well, that just tells you that in the last recovery we've had, is that's what they're doing. They're using debt to kind of prop everything up. And by the way, the U.S. is not the only country doing this. That's going to be the problem in this next downturn globally, especially in the Western world. That if you go look at most of these European countries like Italy, Spain, their debt to GDP now is way higher. Britain, Canada, where I'm from, way higher now than it was in 2006, 2007. And the problem is that at least in 2006, 2007, they could take on a little more debt, right? As the economy, turned down. They cannot do that now, right? They cannot do that. You got the U.S. debt to GDP is over 100%, and Italy's 130%. And I think in Britain it's 90%. So now when you get another downturn, it's going to be way over 100% in all these countries. And that, I think, will ultimately put some pressure on interest rates.
Well, that's all another simple reason for people to get involved in gold and mining stocks and so forth. Well, thanks for taking the time to talk to me. And
yeah, and just to finish here, we're going to go take a walk on the beach, right? But I'll take a small video. Mike may put that up when we're there. But yeah, that's why I like in the last video we kind of do while you're here. I'd like to talk about like the longs then, because we've talked about cryptocurrencies kind of imploding the last week or two. We've talked Mike drinking beer. I'm drinking a glass of champagne. Yeah, and then we've talked about obviously these bubble stocks like Tesla and Facebook. So the next one we like to talk about like some of the longs that we're doing, and we kind of have a unique way to do it. You got to be an accredited investor for a lot of it, but just even you can still buy some junior miners that are solid, even if you're not a accredited investor. So we want to kind of show you this. And the thing about that is these sectors are really cheap right now, right? They're not expensive like these other stocks we've shown you. So,
well, we'll tell people to stay tuned for that and tell everyone goodbye.
Yep.